Hi, this is Randy Finney with Right Side of the Chart, and today is Sunday, October 21st, 2018. In this video, I wanted to share some long trade ideas. These are trade ideas on a watch list that I put together last Sunday, so a week ago today, and I wanted to share these. One thing I do on the site for members, regardless of my own expectations of where the market might be headed, is I try to keep a steady flow of the best looking trade setups out there, whether they're long or short, and then you can be the judge of whichever way you want to go, whatever your own biases are. Depending on your positioning, you might run a balanced portfolio, long, short. That's what I like to do. Take the best looking longs and best looking shorts, and of course, diversify among many different sectors, different types of commodities, asset classes, things like that. All right. So with that being said, this list is not all inclusive. Last week I did a video on as far as longs go on the gold and silver mining stocks with a bunch of long trade setups there, trade ideas. And I also did another one on Chinese stocks with a couple, three of the big Chinese ETFs, as well as a few individual Chinese stocks that stand out. And I'll continue to do the same thing for short trade ideas like I did in the semiconductors and anything else that stands out. All right, so we'll dive into the charts. Before I do, you'll notice one thing as I go through these names, and I did this intentionally. Well, actually, I'll be honest with you, I didn't do it intentionally. As I went through the list, and this is why this also plays into my outlook for the market. The short setups I'm seeing right now are on the usual suspects. I'm talking the big leading components of the S&P 500, the Nasdaq 100, a lot of the big tech stocks, Amazon, things like that have the most bearish charts, and that to me indicates that we're probably looking at more weakness in the broad markets. And I've done this many years. When you look at these stocks that I'm going to go over now, many of these you've probably never heard of. They fly under the radar. They may be, and I didn't scrub them for market cap criteria, but a lot will be small, maybe mid caps. Not many large caps in there, and if there are, they're probably not up there as far as components, heavy weighted components of the broad indices. Why did I say that? Because if we get broad-based sell-off, remember, if you sell your S&P 500 index tracking fund or QQQ or SPY, the thing that gets sold the most for every dollar you redeem out of there, most of that dollar is being sold in Apple and then Amazon and Facebook because those are what they're chock full of. Even if it's not an index tracking fund, if it's a growth fund, it has Apple, it has Amazon, chances are. And so inflows and outflows into mutual funds and ETFs, they cut both ways. When money's flowing into the market, those stocks get bid up and they get bid up unproportionately. The larger cap weighted names, like I just mentioned, tend to get most of the flows, and that same process works in reverse. So as I go through this watch list, you'll notice a lot of these are these niche companies, and I've seen market corrections. So even if I'm right on my views on the market where it's headed in the next, let's say, few weeks to few months, some of these stocks could certainly still play out. So again, it all comes back into running a diversified portfolio and just looking at setups that have the best risk return profile and also may not have a strong correlation with the broad market because that's where I'm leaning towards right now. All right, so let's dive into the charts. This first one, and again, in no particular order, AIMT, this is a small biotech company. Keep in mind when you trade biotechs, I'll try to mention the sector on some of these. The one unknown variable that you have are drugs that are in clinical trial. Usually with it, when you're trading a stock, barring some unexpected headline that comes out of the blue, the thing that you have to navigate around as a trader, an active trader, a swing trader, are quarterly earnings, and you know when that's coming. So you have plenty of time to close your position or hedge up before the earnings announcement and avoid a gap that could go against your position. Biotechs, keep in mind, and I've seen it time and time and time again, you can wake up any given day to this stock or a stock like this, especially the smaller biotechs that have fewer drugs in the pipeline, gapping up or down 30% or more on positive or negative clinical trials because those can come out of the blue. So keep that in mind when trading these, but here's one, and if I'm not mistaken, I've traded this one in the past personally. I believe they have a peanut allergy drug. If I'm not getting my names mixed up here, you can look it up. And I always recommend do your own due diligence on any trade ideas. So what I'm seeing on AIMT, which is Immune Therapeutics, is this falling wedge right here. We had a divergent low back here. You can see what that divergent low, the kind of rally that one sparked. Stock went from about 16 and change up to about $45. Ended with a divergent high. Actually, the divergent high was right there. I should have extended that line. And that led to this correction, which brought us back to support. I have support, support, big old gap right there that was backfilled. Overshot slightly, but we went above it. So the story on this one is we had a pretty nice downtrend line there with just one little spike there, and we broke out last week. In fact, when I found this one last week, it was right there. The breakout already occurred this week, and popped right to my first target, which is 29.20. Reverse there, but the reason I'm pointing it out now is it's back testing, and it's also at that 27-ish support. So a long entry here with a stop somewhat below, depending on your target, and you can see my targets. This was the first target, which was already hit. So my expectation, if it does rally soon from here off this downtrend line, or maybe that $26 level, it shouldn't go much below there. That's probably a good area to put a stop slightly below 26. But I think it'll probably just go on through 29.20 the next time because the initial reaction or the initial tag of that level has already been hit. So 30.40 and then 33.56 is targets on AMIT. RKDA, this one's in the ag input sector. And this little rocket can roar. Last time I pointed it out here a few months back. You can use the search function to find that, and it blew right on, exploded right through my final target, and broke out of this downtrend line. And even when it hit T3, that was 125% gain, and this thing didn't look back. So this little sucker can move when it wants to. That was news induced back then. I forget what it was. Maybe I forget whether somebody was talking about maybe merging, taking them over. I can't remember. It wasn't a buyout candidate because you can see it fell back. Maybe that was the rumor. But either way, this little sucker can move, and there's a downtrend line to set on your charts. I always use log scaling. I get a lot of questions why sometimes people their charts don't match mine. They can't line the trend lines up. You have to use log scaling. I'll give you an example. This is a great stock. The bigger the price differential on your chart, and this stock went up 1,600%, give or take, from the lows, the bigger the difference is. This is what arithmetic scaling. This is what that stock looks like if you don't use log scaling, because it moves, puts every dollar increment is equal in here. So log scaling will put things in percentage terms instead of dollar terms. So when you have a stock go from $50 to 55, well, that's a 10% move. $5 gain. But down here, when it's $5, if it goes up $5 gain also, that's 100% gain. So that's why you get those distortions there if you're wondering why such a big difference. All right, log scaling on these. Next one up, there's a couple of lithium stocks that stood out. I'm going to give you the Canadian shares first for you Canucks that want to trade this one. It trades on the Canadian Venture Exchange. When you see the .V, that's the Canadian Venture Exchange. It's sort of like our small cap indexes, or a little bit more aggressive, smaller companies. So nice falling wedge. You have divergent low right here, just like you had a divergent low right there. Low price stock, so be careful with that. But that one popped about 35+% right there. Here's another divergent low, and it keeps bumping along this trend line. So there's a potential. All of these are potential targets right here. The stock's at $1.60 now. Really needs to take out 182. And, with these low price stocks, see how you have these little whipsaw breakouts. Intraday moves on thinly traded small low price companies are somewhat common. So you want to see it take out 182 with conviction on high above average volume. Things like that will help confirm it. And then you can see some of the support levels on the way down that you could use as a stop loss level. Set your stops a little bit below. And again, low price equals high risk. And they do have U.S. shares, MLNLF. Yep, that's it. And there it is, similar downtrend line right there. You don't pick up the divergences, but it's a Canadian company, so I'd rather, if I'm going to use one or two charts, I'll use those Canadian shares that I just showed you, ML.V. And speaking of lithium stocks, there's another one. Well, you know what? I'm not so hot anymore. This one's already kind of running away. It may have more potential. I'm pointing out some divergences here, but I do think these divergences will probably get burned through. And so I showed you this. I have it drawn here as a wedge type pattern, but it just took out this pretty significant resistance level. And that's why I think this one keeps going. Remember, divergences are not a sell signal, and they do get burned through sometimes. And this one I think has the potential to probably morph into a price channel like this, work its way up here to about the 85-cent level, and then maybe up to 118. Again, low priced, very low priced lithium company. And if you prefer to trade American shares, LIACF. This one's distorted because down here there was a 1 to 10 split, and you had a couple prints here, so the chart is all distorted here, and that's why I'm using those other Canadian shares I just showed you a second ago for charting purposes. AMMJ, American Cannabis. And I'm not crazy about the cannabis stocks. In fact, I had a whole bunch of them on for a short setup list last week. Then, of course, Canada legalized it, and that's the big news. And it was because I had beautiful setups. If they just popped a little more, I was waiting for they would have put in almost all the big ones, big divergent highs, but they already sold off quite a bit. And I think just like the last time around, it was a buy the rumor, sell the news event. So either way, but this little cannabis stock hasn't taken off. AMMJ. I just wanted to point this out. You had a symmetrical triangle here. If it breaks above that and roughly that 66 level, it could run. So just passing that one along for those of you interested, but I'm not crazy about it, and I probably will not take that one. KODK, Eastman Kodak. This one could be headed the way of Sears. I posted in the trading room, I don't know, a year ago or so that Sears looked to me on the path to bankruptcy, and of course, this last week they finally did file for bankruptcy protection, but you'd have to do, and as I would if I were to take this, a little due diligence fundamentally. What does Kodak have left? I don't think I know they get moved into digital. We all know the story. The iPhone cameras, digital cameras killed them. They were too late, moving over the old film company Kodak. But nice downtrend line. If nothing else, a short squeeze, a get in, get out pop. But when you have these low price stocks, you can also see a buyout potential. I don't know if there's any value in this company. If there is, it's still trading at 250. It's not a penny stock yet. So a pop above that downtrend line. It really needs to get also above 276, and then roughly about 310 or so, a little over there, maybe to be safe, let's say 320. And I do believe that if it pops above that, first breakout would be 276 in the downtrend line, then 318. It could run all the way up here to about 487. So it's constructive on the daily and the weekly chart. This is a weekly chart showing you big potential divergent low. PPO still has to cross over to confirm that divergence. So again, just a potential speculative play. I'd put it in the very high risk category. You're trying to catch a falling knife. Don't put anything more into a stock like this and you can afford to lose if you woke up tomorrow and they were filing for bankruptcy protection and the stock fell down to 50 cents from 250. That's how I trade these things. So small amounts if you have a little aggressive portion of your portfolio and you want to put something in here that has a potential if these charts play out, and many times I've seen little stocks like this do it. That's about 100% gain. Yeah, well, I didn't do the math from 250 to 5. Double your money if it plays out. All right, next one up would be PIR. Here's another beaten down stock. $1.50. We all know Pier 1. If you live in the U.S., you know Pier 1. Maybe in Canada, I don't know how far out they're spread. But this is the downtrend line that's probably the most important one to watch right here. There's a little downtrend line, divergent low. You can see down there, see the bullish divergence on the PPO. It's almost flattened out there. MACD would be even more flat. That's why I like to use a PPO. And this one I would see, here's my targets, 210, then the downtrend line. You can just screenshot this or pause the video and you can replicate these targets. But max target, I think, if this one gets a fundamental boost, or max target $4. Possible to see this one up to 290 if this can break out and start to get some traction. So again, I wouldn't mention these low-priced, high-risk companies if the return wasn't worth it. You don't want to go into Pier 1 a stock like this for a 10% gain when you could wake up to a much bigger loss if the company is filing for bankruptcy or some other bad news. Usually a company like this, when you look at a long-term chart, here's Pier 1 back here, it was $25. It's $1.50 now. So obviously something's not great in the company, but just a simple short squeeze, short covering rally, bear market rally in this one. Again, the risk reward there is favorable in my opinion. Just keep your position size light. That makes up for the above average return. You take a quarter position size, a fraction of what you'd normally do. So therefore, if you have a big loss, 10, 20, 30%, it's not going to kill you dollar wise. But if you double your money in this one, it's still worth the effort of putting in a quarter position size. So that's how I trade these guys. Next one up would be GBTC. I'll have to give you, and I will do a chart of the Bitcoin futures. They've been in a trading range recently, but I'm watching that range, and we could get a pop here in Bitcoin. Although it's relatively new as a security or financial instrument, if we see continued market volatility, you're going to see you'll see alternative asset classes, commodities. You'll see flight to safety instruments, gold, and eventually I think treasuries start to get a bid if we see continued volatility in the stock market. And Bitcoin just may find some of that cash that's sloshing around the financial system. So GBTC is it's like an ETF, but technically it's not an ETF. It's what they call a closed-end fund. It'll trade at a premium or discount to the underlying security, which is Bitcoin. But there's a downtrend line to watch. So if this one pops, and you can see the history on it, when Bitcoin wants to run, it can run. Cuts both ways, but there it is. So let's just say right now about 1156 be my target on that one if it breaks out of that falling wedge. PBI. Pitney Bowes, industrial sector, business equipment, office equipment, all that stuff, I believe. There's a downtrend line that's very well defined. The stock's about $7 right now. Nice divergences. I like this one. I like this one on a breakout of that downtrend line. You can see just above there what's been capping this advance is this 50-day moving average. Let me tune that up for you. See that yellow line comes in right above as well. So I like when I see a moving average that has been acting as resistance, capping this move on the way down, and it's right above that downtrend line. So this one I really like. Might even make it on its official setup. We're at $7 now. If we can pop up here to $8, it's about 15%, and then I'd have a final target there. Whether I, decide to book profits there if I take this one or put it as an official trade, may hold out for a move here up to 972. That would be about a 40% gain. Let's see what that looks like on the weekly. It's in a death spiral. It's, catch a falling knife trade. But again, we're talking about it was in a death spiral here and it reversed from there. At that point, it rallied up 170%. Risk and return go hand in hand. You catch these falling knives, and if you get them right, and just with a simple short squeeze or bear market rally, you can make well into the double digits percentage gains on these things. So again, I wouldn't share it if I didn't think the risk wasn't worth the reward wasn't worth the risk. But I have to say that a lot of these stocks, some of these just don't look great from a long-term perspective. So the pass if it's not your cup of tea is what I'm trying to say. GFA. FISA, this is an ADR. That means American Depository Receipt, foreign share, foreign company, residential construction. Downtrend line was taken out there. Not super well defined, but more so that 658 level. You can see that was support here, resistance, 752. Potentially up here to 947, and that's also growth and income play. It's paying, I don't know how secure that dividend is, but I'm showing about an 8.5% dividend yield and nice divergent low there. You can see on the daily chart. Weekly looks even nicer. Nice falling wedge pattern, positive divergences. And so this weekly chart tells me this stock, and I'd have to maybe do a little due diligence on what country it's out of them, what exactly they do in residential construction. But 732, there's some resistance there around 740. So break of this wedge could take this one up to 1316. That's about 85% above where we're trading right now. Things really get good. 25 would be the next target. That's about a 260% gain. So again, worth it. A lot of these are fairly aggressive trades, but again, this has very little, if anything, to do with the U.S. stock market or even the U.S. construction industry. So, which has been pummeling. I might even get to that at the end here. The home builders. Let's see. Next up. JKS, not crazy about Jinko Solar. There's divergence, nice bullish divergence building there. I'm just going to pass it along. It has just overshot this 10-ish, just over $10 long-term support level. This is a weekly chart I just jumped over to. If it can snap back above that level, and sometimes you get that, a brief overshoot. If it can get back above 1010, you see that was the neckline right here of this head and shoulders pattern. There's your left shoulder head, beautiful inverse head and shoulders pattern, I should say, bottoming pattern. And that broke out, played out almost perfectly to the measured target. So it's come back to that neckline, which should act as support now, even though we've overshot it briefly. So if this one can rally soon, then there's some potential. But you might want to wait till it gets back above that level. Depends how you want to play it, or try to trade it for a bounce up back to 1180 here. Uh, DQ, I have a question mark by this one, meaning not my favorite. It's in free fall. DAQO, New Energy, but it looks good. You know, there's a downtrend line, a little wedge, semiconductor. Probably, it would be really nice if it gets down here and the chart's confirmed. Down here would be, let me move that line to, and let's turn on a level, give you a level. Just about 19, a little over 19. There it is. That's pretty decent support. If we still have those divergences there, it would look something like this. That one might be worth stepping at that point in time. That's DQ. Look at the weekly. Just broke down on the weekly, but there it is again, around 1830 on the long term. So we'll call it about down to 1830 up to about 19 is decent support. So some of these may be ready to pop now. Other ones like this might have a little work to do. XAUMF. This one I added last week as an official trade idea. It triggered, it popped above 2, fell right back below, but it's still above the downtrend line, so it still looks good. The breakout so far just proved to be a whipsaw signal, but and it all depends on gold. And that's a whole nother video in itself. I keep doing updates on gold and precious metals, and I'll do those in another video. But again, this is an official trade, so you can just go to the home page and go under trade ideas, long trade ideas, and get all the trade parameters for that trade. All right, next one up, APPS. Digital turbine, software application, downtrend line, pretty well defined, positive divergence at the lows, and it fell to support around 119, just broke out. This one, like a lot of these, I found them last week on Sunday. It went on to break out on Tuesday of this week, but has come back in for a near back test of the trend line. So either on a back test of the trend line or maybe a pullback to 119 or so with a stop not too far below target. There would be that 159, and if it happens to get some traction, final target would be 190 on that one. DS. Drive Shack. All right, this one I see I would favor a little more downside like this. It just ran in this 555 resistance level. I have support here. What is that, about 460 or so? That's my preferred. So it's pretty decent support, and it would keep these divergences intact. So this one, yeah, I'd prefer to see it come back down. So this one has a little work to do, and you can see that support there. I think it's around 440 or so on this weekly chart, and that's DS, Drive Shack. GNC. That's GNC Holdings. They make all the supplements and all that good stuff. Nice divergent low. It already popped, already ran into 458 resistance. Let's see. Let me look at the weekly chart. It needs to take out this trend line. I think this one, this is probably a little premature to even point this one out. I think it'll probably fail there at that resistance, come back in, make another low, or at least another thrust down, and then ultimately go on to breakout. But I do like it longer term. It has some potential and just needs to firm up there. But either way, it's at support now. If it takes out 460 with conviction, it could run all the way up there to 657. But again, probably another thrust down in that one. So just something to keep an eye on. DF, Dean Foods. There's the other theme in here. I had a few lithium stocks, but I'm also packaged foods. There's probably at least 3 or 4 setups, and they may perform well. They're defensive issues. That's a good thing. Consumer defensive sector. People eat during a recession, no matter how ugly things get in the stock market. So these guys aren't going to take it on the chin like tech stocks and semis during the next bear market or big correction, whenever that is. But there's DF. Has some resistance to take out at 809. That could also be a target. Big divergent low here on the daily, and you can see this one could work its way all the way up to 1105. Pays a nice dividend, so that's a growth and income trade as well. The dividend yield's 480 right now. Weekly chart, nice chart. It's at support. Here's a reaction low from back in 2011. It's at that level now with a big, strong divergent low. PPO starting to curl up. I like this one as a growth and income play. Risk reward seems pretty favorable. Let's stop somewhat below. It all depends on your price target, where you want to put your stop. TUP, Tupperware, nice divergent low here. Coming in, support resistance around 33, and then 33, 37.30, but this downtrend line would come into play before that. So that would be the first target, the downtrend line. Then maybe a breakout, a back test, take out 37.30, which is the bottom of a gap, and then look for a gap backfill. So let's just say $40 ultimately. This one, If I was confusing on that, I'm talking about all the reactions along the way. Break, take it long over 33, hit that downtrend line or the 37.30 level, maybe a little reaction there, ultimately a breakout to 40, and that's where I think I'll probably take profits on that one. That's TUP, nothing really standing out on the weekly chart. Okay, just checking the time here. I'm going to go through these fast. I was thinking about splitting the video up, but we'll wrap it up. Only about not even a dozen, maybe 10 more. PPC, another packaged food company, Pilgrim's Pride. I mentioned this one on the site as an unofficial trade idea recently. It broke out and it's retesting the low. So far a double bottom in the stock looks good. And that 1721 was significant support. It was a reaction back here. So if you can buy it the close around 1721 with a stop somewhat below, you see it's already tried to run the stops twice. Probably won't do it again, but if it does, you have to give it a little bit of room. Targets are right here. They're marked. Those are the actual resistance levels. They're not adjusted price targets, but here's a long-term support zone. So maybe it works its way down a little bit more, but again, these are defensive issues. Just looking for, anybody looking for some long exposure that would probably not go down as much as the broad market or at least as QQQ or something like that if things get ugly. BT Group Telecom. This is a telecommunications company in the UK. It's not British Telecom. It's another company, I believe. But there's the 1581 was resist and the downtrend line broke out of this symmetrical triangle. It's not an impulsive breakout, but decent dividend yield, about 6.23%. Targets 1748 or so. Next one, MBT. Mobile Telesystems, another telecom stock. It already broke out of my downtrend line, back tested here. That would have been an optimal entry, and that was also some price support there as well. It failed again at 867. So you watch it. You can buy it down here on pullbacks to 776 or on a breakout at 867. Maybe get a few pennies, 870. Look for an impulsive breakout, and then the target would be 968. You get paid to wait. 13.07% dividend yield. Again, I have not scrubbed these. I cannot tell you if that dividend is secure or not. You can do your own due diligence. Yahoo Finance is a great source, or anywhere on the web search, whatever you like to do for looking into the fundamentals of a company. You can read up and how secure or not their dividend is. If it's not secure, is it already priced? Is a cut already priced in? Those are things I look for, because if a cut's already priced in, by the time they slash the dividends, no big deal if the market's already priced it in, which it may have done in this drop of about 43%. All right, that's MBT. JJOJF. There's actually too many coffee. I'm sorry, there's too many ag ETFs that look nice right now. I've mentioned those before, and I'm also a big proponent of asset allocation. And the agriculture commodities are one area that I've been focused on recently. Highlighted several, unofficial and some official trade ideas, and coffee was one of them. We used what was it? The other one. Oh no, we used sugar recently. I always get those mixed up because put sugar in your coffee all the time. But this is coffee, and I'll go over the ag commodities in a separate video. But you can see they've been moving, and that's something I've been expecting for a long time. This market is sloshing with liquidity and cash, and once these big FANG stocks, if they continue to blow up, these hedge funds and individual investors, everybody, they need to put their money somewhere, and it's going to find a home. Commodities are beat down, many of them at their low end of their historical ranges, and guess what? The good news is commodities don't go bankrupt. You're not going to wake up to a Chapter 11 bankruptcy filing. People need sugar, they need coffee, they need wheat, corn, all that good stuff. So that's been a theme that I've been focusing on all year, and I'll continue to focus on going forward. And again, it warrants its own separate video, which I do from time to time on commodities. HYGS. Hydrogenics, diversified industrials, not my favorite. What am I seeing here that I probably should have penned through that one? It's that support. It broke out recently, but back testing support, not one of my favorite. Let's move on. THS. Another packaged foods company. See, these are, it's a common theme as I go through these charts. I'm seeing some of those that look good. Had a big divergent low back here. Now it rallied from there. Had a nice run off that divergent low. These are things I like to look for. It rallied about 54%. Put in a divergent high here. Had a correction back to this 45-ish level, 46. rallied up again, another divergent high, came back again to 45, 43. You can see it's pretty decent support. So if you can buy it around there with a stop not too far below, you're getting, oh, no dividend. Not showing a dividend in this one, but there is a big gap overhead to potentially fill, and that's THS. Again, not one of my favorites, but worth pointing out. KHC, I do like this. This was an official trade we had earlier this year. We hit our first target here, 661.81. I don't know, we took it somewhere in there. Stop got clipped recently because I had a second target here that we fell just shy of, but it still looks good. What did it do since then? When it ran our stop, it put in another divergent low, extended these divergences that were in place. It's a growth in income. You all know KHC. That's the Kraft Heinz company. Yes, ketchup. Whatever else they make. Nice dividend, 4.5%. It's a consumer defensive stock, meaning if the economy goes south, people still put ketchup on the French fries, at least here in the U.S. I know you Brits put vinegar on yours, on your chips. But there it is. Nice chart on the weekly as well. Big falling wedge. So one of my favorites, probably make its way back on as an official trade. And again, just looking, you're not going to get rich quick off Kraft Heinz, but you can take that into your position sizing. You can feel better taking a full position in this one, and not waking up to a bankruptcy filing. You're collecting dividends, even if the stock goes nowhere, you get paid to wait. So that's KHC. A few more to go, and we will wrap this up. I know it's a long video, but hopefully you guys enjoy these trade ideas and can find some of those useful. HIAN, I'm not crazy about the downtrend line. I just kind of threw it on there as I'm doing this video, but nice divergent low right there. Haynes Celestial Group, consumer defensive. There it is again, packaged food. So I'm seeing a common theme. It looks like a lot of these are bottoming. And where we are in the business cycle, I think it's a great time. These are defensive issues. They're not all run up already. They've already had a correction. They've had a nice bear market or correction off the highs, and this one is down to long-term support on the weekly. You can see I have an arrow here. The PPO just made a bearish cross pointed down. So this one they may want to run the stops. It's already creeping below 25.78. But if they do that, it's just going to put in another divergent low. And so if you're willing to give this one room, I think it works its way back up here to the 35.22 level. At the very least, well, I'm not showing a dividend on this one, but it's in a defensive sector. And again, remember, check, scrub any trades you take over the next month or so, scrub them for earnings. So you don't take something right before it reports and then get caught in a gap against your position. SAFM, Sanderson Farms, another packaged food. This is an official trade now, and you know what? I don't think I had a price alert set for this one. I'm looking at it, may have creeped right below our stop there. May have to update that. That's a shame, but if I do, I can add it back as another trade if it did clip our stop. But this one, just like a lot of these packaged food companies, it's holding nice support here around 97.30 and it's chopping below it. If we hit that stop, then shame on me. That's a little too tight, a little too aggressive of a stop, but it's a pretty decent level. So if you can buy it here on or around $97, 97.30, all the way up to 98, or even around here, around 100, the potential, final target on that one's 128, and so that's SAFM, Sanderson Farms. All right, and one more, and that's it. Yep, THC. And a little more downside. I have a support here. It's coming up. It just hit support at 25.14. But what I'm favoring here on this one is another leg down to about 22.78 or so. Nice support there. Very well defined support, or resistance back there. So maybe just mark that one for a little more downside. And also on the weekly chart, come down to about 22.70 or so. And that one might head up from there. It's a medical care company. All right, we'll stop it here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.